Awkward Insurance. Ashley, we recently hit 1,000 members on our Awkward Insurance Facebook group, which is insanely exciting. And when I noticed it, I was actually a little disappointed because it was already over 1,000. So I was really upset that I missed that rollover. But that is so much thanks to our listeners. The conversations have been helpful and interesting. If you're a member of our Facebook group, thank you so much. And if you aren't, I want to know why. We want you there and we need you there. But anyways, Ashley, I had a fun story. You might have seen it on LinkedIn. Have you seen my slide on LinkedIn?
Yeah, honestly, I thought it was a joke. I thought maybe you photoshopped it. No, it's awesome. It's awesome, but you are like the queen of risk mitigation. And I thought like, oh, that's just a joke. She didn't actually put a slide off of her deck. She wouldn't do that.
So I have my deck rebuilt. There's two 15 by 15 decks on separate levels. One's 7 feet off the ground. The other's just 4 feet off the ground. I mean, no big deal. You can fall off that deck and not seriously injure yourself. It's fine. But in the process, I walk out and I talk to the guys. It's like, hey, do you mind leaving me like 21 inches right here on the railing? I want to put a slide there. My husband hasn't approved it, but he's not here to say no. So I've got a 6-year-old. So I ordered a slide from Home Depot. It's legit. It's like one that you would put on a playset. But like if your kids destroyed it and you have to replace it now. So it comes off our deck. It has a locking gate and everything. But I put it on LinkedIn and I said, underwrite this risk. And oh my gosh, if we don't have some of the most unfun underwriters I've ever met in my life.
Now, what you need to do is you need to have that slide go to a trampoline that does not have a net around it. Then you're fully committed.
Rick, welcome back to Awkward Insurance. I am so thrilled to have you here in solo form, no less. We had you on at the Insurtech Insights NYC conference episode, which was a lot of fun. You and Aviad were just a hoot. I think it was one of my favorite clips, but I'm so excited to have you here all by yourself. Rick is the president and CEO of Hippo Insurance and a board member at the National Alliance for Insurance Education and Research. I love getting you back in the studio again, Rick, but a lot has happened since we last spoke to you in June 2023. Like a lot. Did you see this coming over the last 6 months?
I kind of think we did a little bit. There's always something that happens within the insurance industries when you have prolonged periods of kind of soft market. Eventually, the hard market takes effect, and this is a really interesting hard market. Generally, from I've been doing this for over 30 years, and this is the first time I've seen a hard market hit multiple product lines simultaneously. So I think it's an interesting time. It's a challenging time. Over at Insurtech Connect, one of the things I told the group that I was chatting with is that, Insurtech companies have made a positive difference. You absolutely see it on how different incumbent carriers are starting to think about customer experience, think about customer contact, think about simplicity. And although the path can be rocky from time to time, I told all the Insurtechies there to keep doing it because they are making a difference. And I've yet to see a companies whose path to success is a straight line. Just keep doing it because we are changing the industry for the better.
You said it was an interesting hard market. Is the interesting part just that it's impacting multiple lines?
Yeah, it was. That's the part that I think is really impactful. And so when you look at personal lines, which is my area of expertise, personal lines traditionally, either the auto market was a little bit hard or the homeowners market was a little bit hard. You don't often see hard market on both simultaneously. And I do think the auto hard market is further along, meaning it should turn soft quicker than the property market. But, typical incumbent insurance carriers that write both auto and home, when the market is hard for auto, they lean towards home. And when the market's hard for home, they lean towards auto. Right now, nobody wants to lean towards anything because it's challenging for both.
Yeah, absolutely. Let's level set on what a hard market is for just a second. This might benefit our college students, our high school students, and maybe some consumers that might be listening. I'll give my 5-second version of what a hard market is. Ash, if you want to give your 5-second version, whatever you want, and then just kind of chime in there. Summed up, it's pretty much saying hard market refers to the condition characterized by high insurance premiums, reduced capacity, and stricter underwriting standards. And I think those are pretty much the calls that I get, whether it's from my parents or friends or I don't know, people here at the National Alliance that are like, hey, I hear you like personal lines. What do I need to do with my auto insurance? I'm like, leave it alone. Just don't do anything with it. Ashley, what's your version of hard market?
I mean, you hit the nail on the head, but when I think of a hard market, I think that that's when your true clients that are there to stick out more, and they really stay with you and they listen to you. In the beginning, yeah, sure, they're saving money and that's probably why they came to you. But when it's a hard market and you tell them, listen, everything is going up, it doesn't matter where you go, you're more than welcome to look. The ones that say, no, 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 I believe you and I'll stay there and don't question you, that's the client that you want to keep and the ones you want to pay attention to. I think it kind of weeds out the other people that, you sell on price, you lose on price.
That's the golden egg right there, isn't it? The one that actually believes you?
Mm-hmm. I know.
Good gosh. Rick, anything to add?
No, look, I think that's exactly right, and I think it's interesting because everybody typically has a different view for when markets start turning hard or soft. When it's a very fluid market and things are going well and things start to pivot. There's no doubt about it right now. Everybody agrees we are in the middle of a very hard market, and that's something that I think is interesting. That there's no debate. We are in a hard market, and it is impacting the way that we underwrite price, handle claims, accept or deny risks, handle the existing portfolio. It is in the middle of a challenging time.
Yeah, absolutely. So, what do you feel are some key factors that are contributing to this particular hard market? And maybe kind of in the twist of how you say it's interesting. Like, it's not just one or the other, it's everything. So, what do you think are some key factors to that?
Yeah, I think there's two primary drivers depending on whether you're talking about auto insurance or homeowners insurance. Let's start with auto insurance because I think that's more interesting. And it wasn't that long ago that COVID jumped in, and we'll all remember that insurance companies were not increasing their rates during COVID. In fact, they were decreasing them. Some were putting in filings to cut the rates in half because let's face it, we were all in our homes and nobody really drove around anywhere. If you did happen to have
Right.
a commute, it went from 30 minutes to 3 minutes. I mean, very, very different mindset for individuals. So what insurance companies were saying is, look, we don't need to keep up with inflationary trends, and most insurance companies typically put in an automatic increase for rates as each year goes by because look, things just ultimately get more expensive. They never really go down in price. That whole process absolutely stopped in the middle of COVID and almost reversed itself. Then what happened? COVID ended. People started driving. Those people that were driving started having accidents, and insurance companies said,
More of them because they forgot how to drive
"That's right.
while they were in their homes.
That's right." And they forgot how to interact with one another. Like people just generally got
That's
angry.
everybody in Ohio. That's sorry, I'm not from Ohio, so I'm allowed to say that. That's everyone in Ohio.
It's just
I'm just thinking social distancing didn't add into the auto factor.
no.
Instead, it was just people. We don't mean cars.
That's that's right. No, you're 100% right. So then what's interesting is when the insurance company said, "All right, we need to start raising rates," then some of the regulators like, no, or it just took a while. Even if the regulator said yes, a lot of the sort of traditional insurance companies' tech stacks took a little while to get the rate filings in, get the rates approved, get them in the tech stack, get them into market. And what the auto insurers found is that they had price inadequacy like crazy. And simultaneously, labor and material pricing when you do repair a car were going up like crazy. And let's not forget,
Yeah.
cars are way more sophisticated than they ever were. My son, who just turned 17, just got into a little fender bender, and he's like, "Dad, it's probably not a big deal." And it wasn't his fault, but still, you look at it, and he's thinking it's, this must be $200 or $300 to fix. I'm like, that's going to be like 6 grand just because everything's more expensive. And all of that has to work itself into pricing. And while that's happening, until you get to price adequacy, the market turns hard.
hmm Yeah. I hadn't honestly thought about looking at it with a COVID lens and how we did kind of reduce risk during COVID and people got their discounts or premium rebates because they weren't driving rather than it being a premium decrease. It was like a premium rebate, like a one time premium rebate kind of thing. And that that contributed to some consumer misunderstanding, maybe, and then lower rates that weren't ready. And then, of course, the supply chain issues that contributed to all of that.
Yep.
Oh gosh, I
Yeah, it
hadn't even
was
considered
we were
it.
in the middle of the land that, time stood still for a while, and now we're trying to catch up from that. And then on the homeowner side, it's interesting because
Yeah.
homeowners was really two things. One, just inflationary pricing in your houses. Houses were getting more expensive to repair, and so the normal coverage
Let's talk
A.
about that deck I just built.
Yeah, exactly, exactly. And by the way, it doesn't take the 1 month that they told you. It's like a 6 month project. I'm super frustrated right now. I'm putting a pool in my house, and they started this project like 9 months ago. And I'm watching a house across the street go from bare land to people moving in faster than they can put a pool in my house. And
And that sounds like here in Arkansas, during COVID, everybody wanted a pool. And so there was a huge demand issue there, but then it took forever. Or some pool companies were even going belly up for some reason and not finishing these projects. I'm really leery of people building pools.
yeah, well, I can tell you, mine's going to take like 6 years to get done, I'm sure. So, I
Just
mean,
get out there and start doing it yourself.
yeah, that's exactly what I should do. That's a good idea. I'm sure I won't fall off your deck in the middle of the process and break my neck. But no, it's that, and that's similar to auto insurance, right? Labor and material costs, inflation going up. But then, of course, the wild card for property insurance is the weather. And the weather has just really gotten horrible. And it's both frequency and severity. And it's in places that you never would have expected. It's hailstorms in Tucson, Arizona, as an
Mm.
example. I live here in Austin, Texas, and on September 25th, end of summer, you never have hailstorms. And there was a massive hailstorm. We had softball size hail in Austin, Texas, which is just
Huge.
absolutely crazy.
Yeah, that's insane. So all of that's driving it up. I think was it March of this year? We had a pretty significant EF3 tornado go right through downtown Little Rock, which is just not normal. The way storms usually split over us is to go north over Little Rock or south under Little Rock. And you hit a bunch of field space in the process or some farmland. God, it was devastating to watch it go through.
It's absolutely crazy. And then other perils are people are worried about. So you think about wildfire in California, and a lot of people will say things, and they're right, that, man, look at all the rain we got. The mountains are green, everything's great. It's going to be fine. It's not going to be a bad wildfire season. Well, maybe not this year, but next year, all that stuff that turned green will turn brown. And now you've got massive, massive amounts of fuel. In insurance, we have to try to look forward in terms of what's going to happen for lost costs, and not just look backwards. And that's something that is really getting sort of the risk bearers concerned. And risk bearers can either be, the primary carriers or the reinsurance community, but everybody's worried that California is going to go up more so than it has, over the last few years. And so all of these things create a bunch of anxiety with people that bear risk, which is one of the drivers of hard market.
Yeah. I mean, are there any insurers still left in California right now?
Not a lot. And it is interesting because I do think this does create opportunities over time, but when you're in the middle of it, it is really hard for customers to find insurance coverage, kind of like what Ashley was saying.
Yeah.
Like, don't leave. If you have a policy, stay where you are because you may not be able to get another one.
I think that's really hard for consumers to do right now, too. So, in response to all of these things, you talked about the auto insurance and the home side and some of the regulatory factors that are going into creating this hard market, the supply chain demand that goes into it, all of that. In the summer and fall months of this year, 2023, several insurers paused or limited new business. Hippo was one of them. You
Yep.
guys paused business for a little bit. We've seen some major insurance companies completely pull out of either a line of business or a state altogether. What insights can you offer, kind of seeing ahead, and especially from an Insurtech perspective that tries to project these things out just a little bit, I think, more accurately? What insights do you have on the narrowing property market?
Yeah, it's really I think this is a period of time that people need to understand history a little bit. And so in a lot of insurtech companies, they don't have the test of time or duration. Like they haven't been around that long, and this has happened before, and it will happen again. And so, what a lot of companies are realizing, they need to understand what their portfolio looks like. They need to understand where they might be exposed or overexposed. And that's exactly why some companies are stop writing business or pulling out or starting to non renew. These are generally temporary factors. They will, all these companies, including Hippo, we've already reopened up portions of our business and will continue to do so throughout 2024. But you've got to make sure you understand, what does your portfolio look like and what does it need to look like as this market continues to harden. And that's a piece that's, I think, important. And we've seen it before, after sort of the Northridge earthquake, property markets in California got really tight. After Hurricane Andrew in Florida, property markets got really tight. And you just kind of have to say, look, this is part of the business. You cycle between soft and hard market. When it's soft, you try to get aggressive and you try to grow and you do what you can. When it turns hard, you need to be conservative and you need to make sure you understand your portfolio and you have rate adequacy. And these cycles generally last 5 to 7 years. We had a prolonged soft market. This hard market's hitting us very aggressively. I think
Mm.
the P&C industry, just to put this in context, the P&C industry is starting to state things like the first half of 2023 was the worst half in history. This is an industry that's been around a long time. And to say things like worst half in history sort of explains, it doesn't matter if you're a huge player like State Farm or a smaller player. There's a lot of loss related to concentrations and aggregations, and companies need to make sure they get a handle on it.
Yeah. So how do agents move forward with that information?
It's really hard for agents. It's interesting. It's a bit of a catch-22 because the thing that always happens in hard markets is premiums go up. And we're seeing premium increases throughout the industry, 10, 15, 20, and in some cases 30%. And I think that's going to continue. The good news for agents is that you get a commission based on premium. And so generally when the market gets harder, it's almost a pay increase for agents. Same amount of work, but you get a higher
Now,
base.
wait a second. You said same amount of work. That's not what I'm hearing from
No, 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 no.
agents. I'm
Yes.
hearing they're getting their butts kicked.
Yes, there's two pieces of this. You're right, because that's the theoretical, right? Same amount of work, higher premiums, same commission. The reality is you actually have a real hard time as an agent finding places to put people. And it's not just new business to you, it's also renewal business, because a lot of carriers are starting to non-renew business where they have over concentrations. And they have to do it because they have
Yeah.
to stay healthy. The biggest problem the industry will face is if insurers cannot stay healthy. So they've got to make these difficult decisions. And there's a couple different ways that they do it. One, they start non-renewing business. So now as an agent scrambling, you got to find a home for these customers. And that's really hard, to your point. The second thing too is a lot of carriers, when they want to get off business, there's multiple levers they can move. They can increase rates. They can non-renew business. They can change the terms and conditions and, increase things like deductibles or put roof schedules in. They can also lower agents' commissions. And all of these put headwind against the agent. So it does create a lot of really unique challenges for agents, despite the fact that apples to apples, they'll make more per policy. They're just going to have fewer policies, possibly lower commission, and it's really going to make it hard for new business placement.
Mm. My notebook is just filling up over here. Ashley, you're muted.
How about now? Am I muted?
Now we hear you.
Seriously, I was, and now I don't even remember what it was. So that's great. No, I'm saying while Dustin was taking notes aggressively there, I think what's most important for those that are on the company side of things listening to this is communication with your agents, because I know that we just recently did a carrier partner survey, and communication is lacking in a lot of areas with a lot of companies. And it got to the point that when I was in our agency, there was one company that we said, you don't even have to bother coming out, because you're just coming out to say, you checked a box and you saw us. You're not giving us any information. We have no communication. You'll be in a new position or a new company 6 months from now. So just stop. So I think what's most important is if you're going to be making these major changes, to be going out and talking to your agents and saying, hey, here's what's coming down the pipeline so they're not surprised, and here's why we're doing it, and not just giving a canned answer.
Yeah, that's right, and it is tricky. And so one of the things that I think is important, I grew up in an agency family. Literally, we had a family-owned agency. I've owned my own agencies. I've spent my entire career working with independent agents, and so I generally um, look at things from an agent's perspective. And so it's hard when sometimes you can't. It's hard when you have to make decisions. I met with a few of our very large partners in person, went out to their office and told them that we were going to have to take some of these actions that we talked about before. And what I have found is, although the agents aren't happy about it, they do understand, because they do recognize the risk bearer has been getting hammered over the last couple of years. And it doesn't do anybody any good if any of these risk bearers go out of business. So it's really important to try, actually, to understand, to your point, like, just be as open and honest and communicative as possible, because as an industry, we're going to get through it. And it is hard for everybody on both sides, whether you're the agent side or the carrier side. And certainly it's hard for the customers. A large portion of our business comes from new construction, and we have great partners in this area. One of our best partners is Lennar, who, build more houses than anybody. And I was chatting with them the other day, and they reminded us that people qualifying for a loan when they decided to build that house 9 months ago, the interest rate was very different and the cost of insurance was very different. So now there are customers that have been, getting ready for their new home to be built, and they're going to move to this dream house for them. And they just can't, because of all the cost increases, whether it's the higher interest rates or the higher insurance costs. And we've seen companies in California, as an example, go from $1,500 annual premium to $4,000 annual premium. Trying to ask somebody to pay an extra $200 or $300 a month is the difference on whether they qualify for the loan or not.
Mhm.
So my question is, with all of the changes going on in the hard market and, looking for ways to still remain relevant and competitive, does Hippo, and it's okay if you don't, but does Hippo partner with any other companies to do like a multi-policy discount, since you don't have an auto product, like whereas some other companies partner in the back room with some major
Yeah, we
companies like Travelers?
we do. And something that's misunderstood from Hippo is we actually have several different businesses under the banner of Hippo. And so maybe I'll take a second to explain those. So Hippo, of course, is known as a home insurance provider, but we also have a very large internal agency, like many other companies do. Liberty Mutual has an agency, USAA has an agency, Farmers has an agency, Geico has a massive agency. You look on TV about bundling home and auto with Geico, and people forget Geico doesn't manufacture a single homeowner's insurance policy. In their agency, they put together an agency bundle that helps benefit customers. We also have a platform for independent agents called First Connect. And if there's any agents listening and you need more access to market, you should take a look at firstconnectinsurance.com, because they have access to over 80 different carriers. And some of the technology they provide, although they're two companies, one auto and one home, they can put it together in a quote display, so you can say, hey, let's go ahead and put a Hippo home with somebody else's auto. And it's really trying to create that value of an agency bundle that I do think makes a huge difference when an agent is trying to explain one of the benefits they provide by you coming to the agent to help, because they have access to lots of
Mhm.
carriers, and it's not always the same carrier is good at both. And I, in fact, I actually discourage people from automatically assuming an auto and a home from one carrier makes a lot of sense. Sure, it might be a little bit cheaper, but it may not be the best in class in both. And you can oftentimes find the best home provider and the best auto provider in two different places, and you create that agency bundle, which I think makes sense.
It absolutely does make sense a lot of the times, especially in a soft market. I'm having difficulty with it though. In a hard market, sometimes carriers will non-renew somebody who's just a monoline with them. So that makes it a little bit more difficult and challenging, especially in this market.
It does. And remember earlier I talked about during hard markets, there are opportunities created. And we're
Right.
seeing some of these opportunities in what I'll call early stage or newer companies. So the large incumbents, typically in a hard market, they just slow down. They've got the capital, they've got a long term time horizon or long term perspective, and they just shut down. They stop appointing agents, they start non renewing business, especially if it's monoline business. They just make it very difficult for agents that are looking to move or grow or do whatever they need to do to find it. There are smaller companies that look at these opportunities and say, we're going to dive in. And I'll mention a couple of them. One of them is a company called Bamboo in California that is absolutely growing in California. Another one is Delos that does sort of more wildfire exposed areas. There are smaller companies now that are recognizing an opportunity during this hard market. And this is not new. If you look back in Florida, most every major carrier left Florida after Hurricane Andrew. Then for the next decade, Florida was the most profitable insurance market in the country. And a lot of new
Mhm.
regional players came in. And this is the time for agents to look for new players and regional carriers that they might be able to partner with. And this is one of the reasons why, going to an aggregator sometimes makes sense, like First Connect, because they do have access to some of these regional or smaller or niche or surplus lines or secondary, whatever words you want to use to describe them. That's where you're going to find opportunity during hard markets, not from the big ABC insurance companies.
Yeah. I think right now is the time where insurance agents are learning a lot more about insurance other than the products that they're selling. They're learning terms like aggregators. And there was another one that you said earlier. I was like, oh, I bet that's one that people are leaning into. I can't remember what it was. But I feel like they're spending a lot more time learning about what the hard market means and different strategies because there's not a lot that we can do with the product right now. And so educating yourselves on these, listening to podcasts like this with the awesome CEO of Hippo Insurance.
Well, I'm sure that's not great, but you really can, for especially for the newer agents out there. How many of you understand parametric coverage? Learn about it
Right?
because parametric coverage is absolutely something that fills gaps during
The
these
strategy for sure.
during these markets. Think about when most carriers are increasing their wind held deductibles, and a lot of carriers are going all the way up to 5%. So if you have a $400,000 replacement cost of your house, coverage A of your house, and a 5% deductible, that's a $20,000 hail deductible. Can you buy that down with parametric? Can you find other solutions to sort of spread that risk across multiple carriers for your client? These are the
For
times
sure.
where you've got to come up with and you've got to educate yourself on what the industry can bring, because the industry does find solutions. But those solutions, you don't wake up one day and they're there. They gradually get added to the portfolio of offerings for agents or for the carriers. And you've got to just be well informed to start taking advantage of them while you can.
Absolutely. I feel it.
I was going to say, we have a podcast on parametrics, don't we?
We had some parametric information out of the same conference, Insurtech Insights. Some great, I think we had Sola on and Flood Flash on. So there's some great information about that. And then Sola even did an article for us about parametric coverage. So yeah, there's a lot of information out there on parametric coverage. Very relatively new to the personal lines property market, but I think it's starting to catch fire.
No, it really is, and I think let's try not to get them to do parametric wildfire just yet, but I think that's exactly right, and the thing that Hippo has really pivoted a bit towards is what's in the best interest of the customer. And as an Insurtech, we always try to put customer first. And that may not be selling them a Hippo product. It may be selling them a third party product or a combination of third party products that makes sense. When a customer comes to Hippo, we don't first show Hippo. And if they don't buy it, show them something else. We show them what we think is the best offering, whether it's Hippo or not. And we do bundle other things along with it. And we have an appointment with Sola, both in First Connect and in Hippo. And we absolutely try to put customers with these different unique offerings where it makes sense. One commonly misunderstood thing of Hippo is of the, about $1 billion in premium that we write, only about 35% of it is Hippo homeowners insurance business. The other 65% is us as an agency selling customers best in class products.
Awesome.
That's super interesting. I wouldn't have guessed that. So that's very interesting. All right, Rick, before we close things up here and Dustin makes it any more awkward for me than she already has today, what's on the horizon for Hippo? Is there anything else that you want to share before we wrap this up?
Yeah, this is something that I think is the underlining message for hard markets. Every company, big or small, needs to get to profitability or be profitable when times are tough. And I think you're seeing a massive shift of Insurtechs and others, even VCs that are starting to invest in Insurtechs. They're asking companies, when are you going to get profitable? How are you going to get profitable? How does this work in the long term? And at Hippo, we have a pretty simple goal. We have two goals that we're focusing on right now. One is accelerated path to profitability. And we recently said in our earnings call that we're accelerating that. So in 2024, we will be profitable. The second thing is making sure we continue to understand how we can partner with customers to help them protect the joy of home ownership and protect their homes. Let's not forget, the best claims experience is the claim you never have. So what we can do with proactive preventative services in our home care offering does just that. And you don't have to be a Hippo customer to download the Hippo Home app and get a home health checkup and understand how you score your house in terms of likelihood to have claims. So a lot of companies are doing a lot of things to protect customers, and that's our mission in life over here.
So Rick, I need a quick checkup. What's the score of my slide coming off my 4-foot deck?
Yeah, probably not very high. No, sorry, but
now listen, it has a locking gate-ish. It's a gate-ish,
okay,
but it is
it would have been
locking.
better if you didn't say ish.
Yeah, the ish really kind of destroyed credibility there.
Yeah.
I have a hard time not telling the truth.
Let's just go with the gate doesn't lock. That might be better.
It doesn't. No, the gate does lock, but the gate is made out of like a vinyl type material, so it's not like a sturdy.
All right, all the underwriters listening, let's delete the last 60 seconds of conversation.
Rick, thank you so much for being on the Awkward Insurance Podcast today. I think we had a lot of insightful information shared on kind of like what got us into this market, what we're doing while we're in this market, and kind of the future of where insurance agents may be able to look and turn to. Absolutely enjoyed learning even more about Hippo and kind of what you guys' structure is and how agents can access you and what consumers can look forward to. And I think that really feeds into Hippo's vision of protecting the joy of homeownership. And my joy is having a slide that comes off my 4-foot deck. And I don't care what my underwriter says, but please don't non-renew me.
We certainly will try not to.
Toodles, everybody. Thanks for hanging out and listening to another Awkward Insurance Conversation.
If you haven't already, be sure to join the Awkward Insurance Facebook community. We have an amazing group of people on there.
And for more episodes, head over to the National Alliance website at scic.com. Now go forth and be awkward. Toodles!
That's awkward.